Right, time now to do the balance sheet or the statement of financial position. So here we go again. We've got our trial balance here and blank balance sheet, so we can start off straight away by putting in our current assets. The very first of those is accounts receivable. So accounts receivable can go in there. Let's just change our brush size, our pen. Accounts receivable. Total is 2836. So tick that off. We've got a bank account of 1320. Tick that off. Just running down the list here, we've got a prepayment of 200. I think I might have missed one down there, did I? Yeah, photography supplies on hand. That one there, 950. That's a wee trap, that one. You always got to look out for any inventory or anything that's on hand. In this case, it is 950. And so we did the prepayment, and then we've got accrued income there of 80. Of 80. So our total current assets look as though they are 2836. Clear that. 2836 plus 1320 plus 200 plus 950 plus 80. So 5386. So that's 5386. We've got non-current assets. Okay, so the first one, of course, is property, plant and equipment. And we have a carrying amount. Now we've got to work out what that is. So let's go and work out what that is. So we're going to scroll across here to the note. We've got note 1. So what have we got? We've got the headings are cost less accumulated depreciation Now you get marks for getting these headings correct, and is the cost less accumulated is carrying amount. Now the cameras and equipment, how much were they? Cameras and equipment had a cost of 35,300 after the purchase. So 35,300, and the accumulated depreciation is there, 8,400. So 8,400 minus that, we go 13, that's 9, 15 minus 9 is 6, 26,900. Studio fittings had a cost of 9,000, and accumulated was 2,600. So we've got a cost of 9,000, accumulated of 2,600, giving us a total of 6,400. And finally, office equipment, we have a cost of 19,000 and an accumulated of 4,750. So we've got 19,000 and 4,750 adds up to 10 minus 8 is 2, 90 minus 5 is 14, 250. So we can add all those across. 28,000 and 35,3 is 60. Oh, let's use the calculator. Clear. So we've got 300 plus. Let's just clear that. 300 plus 9,000 plus 19,000 equals 63,300. We've got for accumulated 8,400 plus 2,600 plus 4,750 15,750. So that's 15,750. So a total carrying amount we should have this 63,300 minus 15,750, that becomes 5. 13 minus 8 is 5. 13 minus 6 is 7. So 47,550. So let's go back to the balance sheet. The carrying amount is 47,550. So there's all our, so we've put on our cameras and equipment, office equipment, studio fittings. Okay, good. All that's left looks like that term deposit, and that's the one we want. So we want the term deposit. And that was 15,000. Giving us a total of looks like 62,550. So that makes our total assets is 6, 8 and 5 is 13, 4 and 5 is 9, 5 and 2 is 7, 67,936. Current liabilities, we have accounts payable of 3,145. We can take these off because we've done those. GST payable of 581. And accrued expenses of $1,000, giving us a subtotal of 6, 12, 7, 4, I think. And then non-current liabilities, we have a loan due 30th of June 2019, 22,000. So we have total liabilities of 26,726, 26,726, and therefore we have net assets, which is total assets take away total liabilities, of, let's get this right, 67,936 take away 26,726 equals 41,210. So it's 41,210. Let's do our equity. So equity, we start with opening capital. And that is 42,790. There it is there, so we can tick it off. 42,790. We can add the profit for the year. Add profit. Now we have to go back to the income statement to find the profit, and we'll find it here. There it is there at the bottom, 25,920. 25,920. So that becomes that 9 and 2 is 11, 9 and 8 is 17, 8, 68,710. Less any drawings, less drawings. We'll find them up here. There they are, 27,500, 27,500. And that becomes 0, 1, 7 minus 5 is 2, 8 minus 7 is 1, 6 minus 2 is 4, 41,200. And as you'll see, the closing capital is equal to the total net assets, which is exactly the result we wanted. Don't forget to write in closing capital. And there we have it, a balanced balance sheet.